Hi, I'm Jim Jubak, and welcome to this week's Quick Pick. UUP, that is the Invesco Deutsche Bank US Dollar Index Fund ETF. In my last video, I talked about how the strengthening dollar, the increasingly pricey dollar, is one of the major drivers of stock prices. One of my recommendations of the three things to do in that video was to buy a dollar ETF that'll let you gain in the appreciation. Now, UUP doesn't do anything very complicated. What I'm really interested in is this part of so we're talking about the end of February to now. We've seen about a 9.5% increase in the dollar from then. So we're looking at a fund that's really tracking it. I think we're going to move higher from here. So we're talking about an ETF that's up about 11% year to date at a time when the dollar itself is up about 11.8% year to date. So you can see it's a pretty good tracking vehicle. If you want to see why I think the dollar is still headed higher, you can go back to that earlier video when I talk about Fed interest rates, hikes, and troubles in the Eurozone economies and in the UK economy. About this fund in particular, it's got a decent, the expense ratio is about 0.75%. Not too high, not really low, but then you're getting a very specialized fund. And it's got about 1.66 billion in assets under management. So some liquidity, and it is after all the dollar. So not necessarily something you want to hold forever, but I think if you want to try to give yourself some diversification in this bear market where stock prices are being driven lower by the dollar, this would be a good way to go with part of your money. Thanks very much for watching. It's been Jim Jubak. If you like this video, please give us a thumbs up. You can subscribe to my YouTube channel. That way you get a notification of when we do our next video. You can get more of my stuff on my free site. That's jubakpicks.com. 3 portfolios or 6 portfolios. So there's more and more on my paid site. That's jubakam.com. Thanks very much for watching.